A very good afternoon to all of you. We are again back with our sessions in your course that is called as Project Management, having a code of MMPO002. Myself, Dr. Sanjib Pattnaik. Today is the last unit of this particular paper, which comes under our last block, that is block 4, and the last unit that we shall be looking at today is when you are coming to the end of a project, the project audit and closure. Now, the topic name, that is project audit and closure, almost all of us have heard about the particular term, that is audit. And when we talk about closure, that means the project is completed and we try to close the project or end the project so that it may be handed over to the client according to the nature of closure. Now, audit. As we have seen in our career, the basic beginning of a big test in our educational career was the 10th exam or the board exam, as we call it as. Now, in the earlier classes, that means starting from the first to up till 9th class, whatever we learn during a particular year, we are assessed by our in-house teachers. Assessed means they try to judge whether we have learnt about all the objectives for which the course was meant for through certain kind of examinations. Now, this examination may have some kind of biasness, because when it is in-house, the teachers of our class or our school may be knowing us personally since our class 1 days. So even if we have not fared in a good way, then there are every possibility that biasness in our effectiveness and efficiency in learning the course will be there. So, what happens in class 10? Usually we are exposed to the board exams. Nowadays, we are having board exams either in our own school we give the exam or we go to another school to give the exam. But it will be conducted by a third party external to our school surroundings. Now, the board will be conducting the exam, and based on our performance, they will be trying to judge whether we are matching to the set standards or not. That means way we are appearing the exam, the way we are writing, the way we have understood the various kind of fundamentals, the formulas, the techniques of various kind of subjects, uh, those are assessed and we are given certain kind of results on that. Now, when we talk of a project, how well the project is going on. Now, we have learnt in a particular topic called as project monitoring and control. There also we try to look at, when we talk about the term particularly that is project monitoring, there at any given point of time, how the project is being done. That means what are the activities that were planned up till that point and how much is the completion stage in terms of cost as well as time, along with the quality of the work done also. Now, this monitoring will tell us whether we are having any kind of favorable or unfavorable deviation or impact on the project's overall objective. Now, this is carried out by in-house or the personnels belonging to the project. So here again we can say, yes, there may be chances of biasness in judging the kind of the progress of the activities. Since we are in-house, yes, even if the activity is not up to the proper set standards as per the plan, sometimes we allow that as yes, it is okay, we can pass that on, we can do it, or whatever has been done is acceptable. Now here the answer is, will it have any kind of impact on the overall objective of the project? The answer is yes. It may hamper the deliverables of the project or the achievement of the objectives of the project in terms of time, cost, and quality. Now, in order to overcome this kind of biasness, usually the projects are subjected to various kind of audits. So audits are some kind of assessment where it is seen that the practices adopted by the organization in completing the activities of the project, whether they are going according to the policies, the actual way of doing it or not. And this assessment is done by the third parties, that means outsiders, who will not have biasness regarding the progress of the project. They will give or try to give or form an opinion. Either it is having a good thing or good impact or bad impact on the project's final objective. And they will try to suggest what kind of corrections we need to do. Finally, once the project ends, in what way it is ending and how the project is handed over to the client. Is it a turnkey basis or it is non-turnkey basis if it is for various work packages of the project. So these are all the things that we shall be looking in our session today. So let us begin with the project audit. Now we are talking about some kind of assessment with respect to our own example. That means the examination, the 10th board examination. Similarly, assessment of the activities, various activities that is going on, if it is in the midway or some way in the implementation stage of the project, or assessment at the end of the project. Coming to our 10th board exam, the assessment can be done midway through various kind of internals or pre-board exams. Similarly, for projects, we can have assessments by the third party in the midway of the implementation stage. That means as the work is progressing, or at the end of the project. So the objective is to assess a project performance. Now when we talk of performance, we talk of time and cost along with quality, and whether this progress or performance of the project's activity, if it is in the midway or as a whole, is meeting the predetermined standards. That is the objective of project audit. And this project audit, as we have seen up till now, is undertaken by external party. Why? Now we have seen, if it is done internally, then there are every possibilities of biasness creeping in to the assessment process. That means even if it is not going on correctly, sometimes the internal party who is assessing the thing may pass it that yes, it is going on smoothly. So in order to do away with this kind of biasness, it is done by an external party, but not by the project team and the command structure. When we say project team, that means the project manager along with certain personnels of different functional areas will form the audit team, which may have biasness towards the project. When we are talking about command structure, that means the various levels of management, top management, the executive, and the operational. They also are in-house employees of the organization. So if they assess the project, then also the chances of biasness will creep in. So to avoid this, the project audit is undertaken by the external parties. Now here we have to remember that if we are having a business or sole proprietor business to be specific, then audit may be done or not done, or may be legally required or not required. That means if we don't do audit also, we are not affected by legal terms and conditions. However, if we are running a public project or a public project in partnership mode, then we have to do the audits at regular interval, which is usually 1 year period. Yes, we can do also the audit as the work of the project is progressing. That means in midway or in time periods between the last stage of the financial year, that is the end of the year. So you can have various type of audits like midway, like at the end of each particular period of time, or another one is at the completion, at the final completion of the project. The Chartered Institute of Internal Auditors, they define auditing as the process of an independent, impartial assurance and consulting activity intended to provide value and improve the organization's operations. What it means? Now, auditing is a process of an independent, impartial. What it is? Now a third party does it, who are not associated with the organization or the project team. Impartial assurance. Impartial. What do we mean by that? Now it should not have any kind of biasness in its assessment regarding the project's progress. Assurance to whom? Now, assurance to any stakeholders. Stakeholders can be government. Stakeholders also can be the financiers or the creditors, the in-house employees, the banks and the financial institutions, etc. And consulting activity, they will give consultancy in the front that whatever activity is being done, is it adhering to the set standards that is practiced across industries, intended to provide value. Now, if the practices adopted by the project are matching the set standards, then they are doing well. The things are going in the right direction. So that will enhance that yes, the project is going to succeed in the future. So activities intended to provide value and improve the organization's operations. Now, if some lacuna is found out, Suggestions will be given by the auditors, that means the persons who are carrying out the audit, that these are the necessary changes you have to make to the way that we are doing the work, so that there will be improvement in the operations of the organization activities. The P3 assurance. What is P3? Now the project, the program, and the portfolio is the process of assuring stakeholders of meeting their scope, time, cost, and quality objectives and realize their benefits. Now, here we are talking of fastest project. Now, we know that a project consists of a number of activities. Now, these activities, whether they are being done in proper way, meeting the industry standards, that will be assessed. If it is matching the thing, then it gives us an assurance as a stakeholder that our aspirations or the objectives are going to be met by the project and we can realize their benefits. When we are talking of portfolio, that means in financial terms, here we talk about the shares, that means the practices adopted in the financial front of the organization. Are they meeting the industry norms? Are they adhering to the industry standards? If it is yes, then it assures the stakeholders that the company is doing correctly. And this assurance is in terms of scope. That means the sphere for which the deliverables are meant, the time schedule that we shall be adhering to, the cost, whatever we have envisaged, that we shall be completing, and quality should be as per the objectives, so that what will happen? Benefits will accrue to us. Now, when we are talking of types of audit, what are the various audits we see? One is process audit, another one is product audit, the last one is system audit. Now, when we talk about the term audit, we know that we try to compare the actual operation or the method or the activity with certain kind of set standards or guidelines. So when we are talking of process audit, we know that every organization generating services or products are going through a operational phase. That means we have a conversion system whereby inputs are fed into the conversion system and conversion system tries to get the inputs into outputs as desired. That means in terms of quality as well as cost and in right time. So when we are talking of process audit, here we are talking of the conversion processes. Whether the process or the conversion process is operating with predetermined parameters. That means the activities in the operational front, are they going on as per the set standards? So an operation or method of converting the inputs into outputs is compared with predetermined guidelines or requirements. Product audit. Now, when we are talking of product, we can have the output, that is the product, in terms of goods and services. So goods and services like hardware. Hardware means the things that we can touch, we can feel, we can see, having physical dimension, etc. We try to create goods or products in that fashion. Processed goods, from a given input which is processed into another form. Software, that means particularly the services that we get as the product or the output are examined, that means assessed, we assess through audits to determine whether it complies with the set standards. Whatever are the dimensions, the quality, the cost envisaged for the output or the product, be it goods or services, whatever are the standards set by the organization, is it able to achieve that? The last type of audit is system audit. Now, let us talk about a system. What is a system? When we try to describe that, we say that the system tries to process the inputs into outputs, just like we have seen in the product case or the process case. But whatever the activities or the things that are happening are documented. Now, this documentation process will help us to assess whether the system components or the elements are in accordance with set standards. So we can have three types of audits: the process, the product, and the system. Now, when shall we audit? Here we have in-process project audits. Another one is post-project audits. Now, in-process project audits, the name itself in process. That means as the implementation stage is going on, or the progress of the activities in a project are going on, what we do, we pick up or do the audits at regular time intervals to see that whether the activities till the point of time when the audits are being carried upon, are they meeting the set standards? So, in process means while the project is in the process of implementation, it is yet to be complete. Now, the second one is the post project audits. Now, once a project is completed, whatever form it may be, as we shall see in the latter stages, that means the closure stages, when a project is closed, we try to audit the project. That means make an assessment whether the objectives of the project, which was envisaged at the very beginning, or the planning stage, has it been met when the project is completed or closed? Now, this is assessed through post-project audits. Now, we can have post-project audits either right at the end of the project, that means closure of the project. That means immediately when the project is closed, we take up post-project audits. Sometimes what happens, the project which we have carried out and completed is going to have the deliverables over a fair length of time. That means over a number of years for the client. Now, whether actually the outputs of the project, when it is actually into the operational stage, giving or matching the objectives, maybe after 3 years, maybe after 4 years, maybe every year after it is closed. So post-project audits can be of two types. One is right at the end of the project, immediately it is taken up, or another way is once the project is completed and it starts its operations, we can check whether the deliverables of the project over the future years is actually happening as per the set standards. So in two ways we can have post-project audits. Now, how the audit is done? Sorry. When we are talking of the audit process, we look at the way the audit is carried out. Now, audit is not legally necessary for private businesses. At the beginning, while we were discussing regarding the things of audit, we said the private businesses running like sole proprietorship houses. There, legally audit is not required because it is the own money of the investor that is invested in the project. Whatever are the profit and loss generated after the project is operational is the headache or the liability belongs to the sole proprietor. But it is legally necessary for public businesses or public private entrepreneurs, partnerships. So here informations on fund inflows and outflows during a fiscal year is provided to stakeholders and regulatory organizations. Now, for a project, what happens? You may have fund inflows. One way is the client will be giving you or providing you funds at various stages of the implementation stage of the project. So there, whatever funds are coming in, how they are being utilized, that means outflows. That, in other words, we can say how it is being spent on various kind of project activities. Now, this information is provided to stakeholders and regulatory organizations after making a proper assessment. What is that proper assessment? Now, it will be compared with what was the plan that was for the various activities cost that has been set at the beginning and what actually is happening at each of the fiscal year. Whether we are matching the set standards or there is something called as the cost overruns. So, this information gives the stakeholders and regulatory organization regarding the performance of the project team or the project organization. Now, this can be done from few months to each year. That means each year we have to take up the audit process. Yes. But if you want, you can have periodic audits, suppose say quarterly audits, suppose monthly audits. That means we shall regularly assess the cash inflows and outflows during the time periods for which the audit was carried out. Now, after the assessment is done, the auditor, that means the person who is in charge of the auditing process, that means a third party established audit team will be coming, headed by a person called as auditor. They will offer, the auditor will offer a qualified opinion. What is the qualified opinion? Now, it is the judgment regarding the things the work is progressing. That means, is it going on in the correct direction or is there any kind of biasness etc. that is creeping in, or we are not meeting the set standards. And all this assessment are done on the basis of the information collected from the project organization or the project team. So the information, whether it is correct or not, will give you a fair assessment of the project's progress. Now, if the information is not accurate, our assessment may be wrong, or it may give false kind of interpretations. So the auditor will give an opinion regarding the accuracy of information at the end, based on which the assessment or the audit was based. Now, in the audit process, we have different stages. So, what are the different stages in the audit process? Now, the first is planning. Now, the planning stage of the audit process, what the organization do, or the project organization or the project team will do, it will try to ask a third party auditor or the auditing company or auditing organization and ask them to carry out the audit for the project. That means a third party auditing team will be appointed for the project. Now here they will be trying to assess what kind of activities, up till what period of time. So this kind of plans will be made at the first stage. Secondly, we go to internal controls. Now, we have seen that in projects, the monitoring and control part is very vital as the implementation stage is going on. Now, while monitoring, we get the deviations. Deviation means whether the actuals is differing from the planned activities. Now, if the deviations are there, we try to see whether it is positive or negative. If it is negative, then what kind of steps we shall take to reduce the deviation, called as control activities. Now the third stage is the testing stage. Now whatever are the activities suggested by the audit team for negating the deviations in the project will be tested. Tested in the sense means you can go for a pilot testing. What is that? Now, instead of going for audit of all the activities, you can audit a very few activities and see what kind of results are coming out. Now, due to audit process, if the pilot testing results are going to have a positive impact on the project organization, we go for the whole organization audit process. That means all the activities will be audited. And finally, whatever are the results will be reported to the various stakeholders like the management of the organization, the project team, like the government officials, like the parties interested in the project, etc. So they will be reported. Now, who will carry out the audit? Now, whenever we talk of audit, it is usually the external party or the third party that will be carrying out the audit. So, in an organization, if you are having a project management office, this will be having under its ambit various kind of projects that is going on. Now the project management office will try to select various personnels from various functional areas and may assign that team to audit a particular project. So project management office can go for auditing any kind of project. Another is authorized management committee. Now, if the top management wants to see whether the project is going as per the set standards or not, it may appoint a team outside the project who will try to assess the project's performance either till date or at its completion. And the third one is designated audit department. Many organizations have a special department called as the audit department. Their function is to assess, that means audit, the various projects that are being carried out by the organization. And finally, we also have the external auditor, which is very commonly practiced. That means a third party auditing team will be assessing the performance of the project. Project management audit is methodical. That means it follows a proper process. Unbiased evaluation. That means if the activities are not going on properly, then assessment should be bad. If activities is going on as per the set standards, then it is good. Information is concealing certain things, then the final report will be concealment of reports is there. So, unbiased evaluation of actual affairs undertaken by qualified examiner. The audit team should have a diverse set of abilities like audit, project management, and controls. That means they should be thorough on the process of audit, how a project is carried out effectively and efficiently, and the control techniques. That means if deviations are there, how can we have the controls? Also, the audit team should have industry and subject area experience. Well and good. That has to be. Anyone who is trying to assess a particular project in certain line of industry should have proficiency in that industry to carry out the audit. Now, after the audit process is completed, an audit report is generated by the audit team. Now, this audit report is basically the task of the auditor. That means the person in charge of auditing. So, it is a letter from the impartial, that means unbiased external auditor that summarizes the findings of the audit process. That means they will form a judgment regarding the way the things are going on in the project activities. This report expresses auditor's judgment whether the company's financial statements like balance sheet, the profit loss account, the funds flow statement are in accordance with generally accepted accounting principles. Nowadays, it has been mandatory that we go by the GAAP while making our financial statements, and it should be free from material misstatement. That means no wrong information should be given in those financial statements. Now it is the duty of the auditor is to check whether there are any kind of misstatement or not in the financial statements. Now this audit report is very useful for various users like banks, financial institutions, investors, creditors, and regulators. Banks, financial institutions, investors, creditors, etc. provide funds for project activities of the project. Now, looking at the financial statements, whether they are in accordance with GAAP without containing any kind of material misstatement, that means they are assured whatever is reflected in the financial statement is correct, they will finance the project. And regulators like the government agencies are assured that yes, the financial transactions are going on correctly in the projects. The various types of audit report that can come, which is very important. First is clean report. When we are talking about a clean report, we are talking of all kind of information used in assessment and preparation of the audit report is unbiased and the information provided is not tampered with or there is any kind of misstatement. So, when the auditor's report contains the word clean, that means the report is based on actual informations. Second is qualified report. Sometimes what happens, small misinformations may be there or wrong informations may be there, which may not have a negative impact on the overall deliverables of the projects or achievement of the project objective. Now here some kind of the misstatements are creeping in without having any impact. So there the auditor gives a notion called as qualified report. Now the most dangerous things or the dangerous opinion that is given by auditor is adverse opinion. What it is? Now, the informations provided by the organization which was audited consists of false information or it has been created falsely. So if such kind of things are there, then the auditor will put his opinion as adverse opinion. And here the various kind of financial institutions etc. may not come forward or legal actions may be started against the organization due to this adverse opinion. And lastly, we can have a audit report which is disclaimer of opinion. Sometimes in order to assess whether the actual performance is meeting the set standards or not, the auditors try to search for informations which are not provided by the organization to them. In that case, the auditor may come up with a report that is disclaimer of opinion. That means it is not based on information or the organization has concealed the information. Format of audit report. Now once an audit is completed, the report is prepared by the auditor and this is the general format of an audit report. We can see in simple terms, first section is title. Audit of a particular activity for the period this to this. So the audit report's title should be very simple and it should be independent. That means it should be unbiased. Addressee. Now the audit is always carried out for another organization by the audit party. So for whom it is done is our address. Then we go for introduction section. There the name of the organization and the period for which the audit was carried out. What are the responsibility of the organization's directors and the external auditors? The next section will be opinion, like clean report or the qualified report, adverse report, etc. will be put there. using the next section, that is basis of opinion. That means what kind of standards were used. If any other things are needed to be shown, it will be shown in the other reporting. Finally, auditor puts the signature along with date and place. When we are talking of project closure, it is the final stage of the project life cycle. Now, here we try to look at whether the project's deliverables or the objectives are meeting the initial plans or not. When it is not closed properly, no lessons are learnt and team efforts are not recognized and honored, which will bring less satisfaction for clients. The different types of closure may be normal, that means project is completed, premature. Sometimes projects will be completed before achieving its actual objectives due to lack of funds. Another is perpetual projects. Sometimes projects will go on for an indefinite period of time as the scope increases more and more. And finally, failed projects are those which are closed before completion due to unavailability of resources. Now, the process of closure includes technical phases. That means we try to learn about what are the objectives that we have achieved or not achieved. Learning phase, we know that every activity that we go through makes us learn about the activity. Can we bring an improvement on that? Then finally, people phase. Yes, we should appreciate the work of people and express our gratitude for the project. Finally, we talk about performance evaluation. We try to evaluate the performance of the employees, how they are doing the work. It can be at the end of the year or it may be throughout the year. Now, if it is the performance is well and good, we take decisions regarding pay raises, promotions, and layups. So, thank you all. This brings us to the end of our paper called as Project Management. Thank you again.